Hello, my dear friend. Welcome to the program Gyan Se Kalyan. We are discussing the GST, Goods and Service Tax in India. So today we are going to discuss the existing indirect tax structure in India. So what was prevailing before this GST? So under the central taxes, there was central excise duty, additional duties of excise duty levied under Medicinal and Toilet Preparation Act, additional duties of custom that is called CBD and SAD, service tax and surcharge and cesses. Next, in case of state taxes, state by sale tax, central sale tax, purchase tax, entertainment tax other than those levied by local body, luxury tax, entry tax, all form taxes on lottery, betting, gambling, surcharge, etc. So now we are proceeding to the next part, that is features of Constitution Amendment Act. So alcohol for human consumption, power to tax remain with the state. 5 petroleum product, crude oil, diesel, petrol, natural gas and ATF. GST Council to decide the date from which GST will be applicable. Tobacco, part of GST but power to levy additional excise duty with the central government. Entertainment tax levied by local body, power to tax remain with the state. So we are coming to the very important part of the GST, that is GST Council Constitution. So chairperson Union Finance Minister, vice chairperson to be chosen among the Minister of State Government, member MOS Finance and all Minister of Finance, taxation of each state. Quorum is 50% of the total members. State 2/3 weightage and central 1/3 weightage. Decision by 75% majority, that is 2/3. Council to make recommendation on every related to GST, including laws, rules and rates, etc. So very important part, GST Council decisions. Threshold limit for exemption to be rupees 20 lakh, rupees 10 lakh for special category states. Compounding threshold limit to be rupees 50 lakh with category tax rate, manufacturer 1%, traders 2%, restaurant 5%. Government may convert existing area based exemption scheme into reimbursement based scheme. So for tax rate, namely 5%, 12%, 18% and 28%, some goods and services would be exempt. Separate tax rate for precious metals. So these all are the GST Council decision. So next part says over the peak rate of 28% on a specified luxury and seen goods. To ensure single interface, all administrative control over 90% of taxpayer having turnover below rupees 1.50 crore would vest with state tax administration. 10% of the taxpayer having turnover below rupees 1.5 crore would vest with the central tax administration. Taxpayer having turnover over rupees 1.50 crore would be divided equally between central and state tax administration. So compensation mechanism for the states. Revenue of all tax subsumed in GST by the central state for 2015-16 as the base. Assumption
of 14% annual growth rate. Compensation to be provided through cess only on few specified luxury and demerit goods. Main features of the GST Act: all transaction and processes only through electronic mode, non-intrusive administration, PAN-based registration, registration only if turnover more than rupees 20 lakh, option of voluntary registration, dimmed registration in 3 working days, input tax credit available on taxes paid on all procurement except few specified items. Main features of GST continues: credit available to recipient only if invoice is matched. Help fight huge evasion of taxes. Set up auto-populated monthly return and annual return. Composition taxpayer to file quarterly return. Automatic generation of returns. GST practitioner for assisting filing of returns. GSTN and GST Subidha provider GSPS to provide technology based assistance. Main features of the GST Act: tax can be deposited by internet banking, NEFT, RTGS debit oblique credit card and over the counter. Concept of TDS for certain specified categories. Concept of TCS for e-commerce company. Refund to be granted within 60 days. Provisional release of 90%, refund to exporter within 7 days. Very important. So now we are again proceeding to the main feature: interest payable if refund not sanctioned in time. Refund to be directly credited to bank account. Comprehensive transitional provision for smooth transition of existing taxpayer to GST regime. A special procedure for job work. System of GST compliance rating. Anti-profiteering provision. So now we are coming to the GST Network, GSTN, a section 25. As per section 25, private limited company with a strategic control with the government to function as a common pass-through portal for taxpayer, submit registration application, file file returns, make tax payment, to develop back-end models for 25 state model. Second, Infosys appointed as managed service provider MSP. 34 GST Subidha provider GSPS appointed. So return process. Example, return for July 2017. Here one example is provided to understand the process of filing return. Taxpayer GSTN supplier invoice detail upload from 1st of July to 10th of the August. Supplier file GSTR 1 by 10th of August. Auto population of invoices detail in GSTR2 of recipient. Recipient amend or modify and file GSTR2 by 15th of the August. Supplier and recipient to reconcile detail by 17th of the August. Supplier file GSTR3 by 20th of the August and pay tax. So this is very simple procedure. Hello my dear. So now we are coming to the role of CBEC. Now CBIC. Role in policy making, drafting of GST law, rules and procedure, CGST, UTGST, and IGST law, assessment, audit, anti-evasion and enforcement under CGST, UTGST and IGEST. Levy and collection of central excise duty on product, custom, GST, petroleum product and tobacco. Levy and collection of custom duties, developing linkage of CBEC GST system within GSTN, training of officials of both center and states, outreach program for trade and industry. And interesting. Hello, my dear. So now come to the benefit of GST, reduction in cascading taxes, overall reduction in price, common national market. So these all decrease in inflation, benefit to small taxpayer, self-regulating tax system, non-intrusive electronic tax system, decrease in black transaction. Here these provide ease of doing business. Now, again, proceeding to the other part, simplified tax regime, reduction in multiplicity of taxes, more informed consumer, consumption-based tax, abolition of CST. So here, poorer state will gain. So export to be zero rated. Protection of domestic industry, that is IGST. So, hello my dear, make in India. Thank you very much.